Well, fasten your seatbelts because we're going to take you on a journey through India's aviation market, which is often turbulence hit. Hello and welcome to this special episode of Man About Markets. With me, as always, my co-pilot, Mangalam.
Sit back, relax, enjoy the hospitality that our crew has for you. If there is turbulence, then we will ask you to fasten your seatbelts once again. But importantly, there are no emergency exits. You have to be on this destination with us. It's time for takeoff, so let's push back.
We will, and let me start by giving you a big picture of what the market looks like. Now, India is currently the third largest civil aviation market, and it contributes more than 5% to India's GDP, and it is growing fast. The market is expected to grow by 2.5 times the current level by FY30, growing at a compounded annual growth rate of more than 14%, Mangalam.
Well, that's a quick snapshot, Ritu, and I'll take that part away from you. The third largest market after US and China. In fact, that's what the latest available data coming in from the International Air Transport Association, or IATA as we know it, indicates as well. India is the third largest domestic passenger market. The USA was, of course, the one with the top spot with close to 20% revenue passenger kilometer share, which is basically the domestic passengers market share in the world. It had 83% passenger load factor, or occupancy as we know it as well. China at number 2 had 6% market share with 72% passenger load factor or occupancy as well. Now for India, with a share of 2% of the global industry revenue passenger kilometers, we're at number 3. And this is a measure, of course, of demand for airline services. But if you just take a look at the occupancy, or the PLF, in the last 4 months, the Indian flights have been more occupied than those in the US, China, and others as well. What did I say? India has 2% market share. Guess what? Bigger markets like Brazil, Japan, and Australia have a share of less than 2%. So, of course, a lot of people flying to a lot of places and more occupied planes.
More occupied planes, but you know, how about the India market's growth? Because we talk about the potential, right? We don't really talk about how it is currently.
Well, about the potential, there is a fair amount, because this revenue growth trajectory is expected to continue. As per CAPA research, the Indian intra-subcontinent traffic, which is dominated by the Indian domestic market, is projected to rise at a CAGR of 10.5% between 2018 and 2028. We're almost midway there, and this growth rate is faster than any other large intra-regional domestic market in the world. So India is big and growing faster than any other player in the world.
Well, you know, the aviation industry was one of the hardest hit by the pandemic, but the overall air travel demand is coming back to near pre-COVID levels. India is forecast to see domestic air passenger traffic rise to 160 million in this financial year and more than double to 350 million by FY30. The international traffic in India is similarly expected to rise from about 75 million in this financial year to almost 160 by FY30. Now, let's look at how, how the players in the market really are placed. It is very much dominated by Indigo Airlines, which has a share of more than 57% of the entire air passenger market in India, followed by the Air India Group with a market share of more than 25%. Go First, which of course now we know has filed for bankruptcy, had a share of about 7%. What does this mean in terms of share for other players and pricing? We'll have to see how the story plays out. SpiceJet and Akasa make up the rest of the market. So this gives you a sense of how the market is currently placed, and we'll see how it grows from here.
We'll see how it grows from here, and that sets us up perfectly to invite the first guest on our show. Vinay Dube, who's the founder and CEO of our latest airlines, Akasa Air, joins us now. While the airline is the latest, Mr. Dube has seen a wide swathe of experience as well. From Jet Airways to Akasa. Mr. Dube, thank you for joining in. What have the biggest lessons about running an airline in India been for you?
You know, I'd say there are plenty of lessons, but for us, I think there are 3 or 4 factors that we have applied towards the creation of Akasa. One of them is you need to have a very, very competitive cost structure, which is something that we have built into our plans from day one. The second thing is that you have to have an extremely reliable operation and a high-class customer experience. And again, these are things lessons that we have applied to Akasa as well.
Well, a competitive cost structure, a very competitive market as well, Mr. Dube, because, like we were just pointing out, Indigo has a share of more than 57%, and it's really a volume game, winner takes it all market, so to speak. Now, you've been in the skies for 9 months and you've been able to get about a 3% share. But what is the opportunity for a young airline in the Indian market, would you say?
First, I will challenge your premise of a winner-take-all. I think, we have potentially seen some of that in India, but I would not be so narrow to say what happens, let's say, for the last 4 or 5 years in India is necessarily what happens in other parts of the world. If you look at other parts of the world, there are multiple profitable airlines, and there are multiple profitable airlines that exist for multiple years. I've given this example many, many times, but my former employer was one of many airlines in the US which between 2010 and 2019, this was really a decade of pre-COVID years that multiple airlines were profitable in the US. So for me, these are some of the lessons that led us to come into the market. And I think if you are a professionally managed and empowered management team, I think you can actually execute a strategy that will allow us to compete with, with the other players here in the country. And that's really the key, is having an empowered management team that is able to focus on its strategy. You talked about a 3% market share. I'd say for the first few days or the first 2 weeks of May, I think we're close to a 5% market share. So we believe we are well on our way to creating a critical mass.
Well, hold your thoughts, Mr. Dube. We'll come back to you in just a bit. Now, this is coming at a time when demand for air travel is at an all-time high. Domestic passenger traffic averaged about 430,000 per day in April of 2023, which is the month gone by, which is much higher than the average of 373,000 passengers in FY23. Now, the industry-level load factor has also consistently been holding up above 85% in the last few months, and ATF, which is fuel, which forms the largest cost component for all airlines, has come off from an average of 120 rupees in the third quarter of FY23 to 112 rupees in the fourth quarter.
So demand is strong, it is steady. Things are improving for the aviation sector in terms of costs, but importantly, the question is whether we have that sort of supply or not. And I'm looking at some data here. As of now, we have 684 planes in India. That's the fleet size, which is slightly under 700, which is less than 3% of the global fleet of over 28,000 planes. This fleet size is expected to double by FY30. In fact, there have been more than 1,100 aircraft on order over the next few years. And you would have read this in the newspapers or watched this on our channel as well, the recent mega 470 jet order placed by Air India as well. So there is a fair amount of demand, but at the same time, it is being supported by supply.
Well, but that supply will not immediately come to the market. So let me pose that question to Mr. Dube. The demand for air travel, like we've been pointing out, clearly at an all-time high, but is supply going to be a constraint because these mega orders are only going to get delivered over the next several years?
I think you've got Indian Airlines as a whole that have placed some pretty large orders. And as bullish as I am, and I don't think you can find another person that's more bullish about the long-term future of Indian aviation, and as bullish as I am about that, I believe that supply will not be a constraint. I think we will have a very healthy equilibrium between demand and supply, and in large part because of the investment that the government is making in airports, right? We've gone from 70 airports to 140 with a projection to go to 200 airports, some of these in very, very key areas that are constrained today. And I think it's a combination of the infrastructure that the government is focused on, the large aircraft orders that the Indian carriers have placed, that I think together will help keep pace with the increased demand here in India for the next 2 decades.
Mr. Dube, you've alluded to Air India multiple times. Let's ask about Akasa's own plans itself. You've ordered 72 aircraft and there are more in the pipeline. You're also looking to fly international soon. What's your strategy there?
We remain, on track based on, what I have said previously. I think there's nothing that has, slowed us down. So growth is an important element, and we continue to get, aircraft deliveries for our growth. I think our next aircraft should be here within the next 60 days, which crosses the 20 aircraft mark for us, which will put us in a position to fly internationally by the end of the year. We're well on pace to get our 72 aircrafts delivered by the end of the first calendar quarter of 2027. And as I said, we will be putting a much larger aircraft order in here in the calendar year 2023.
With everything looking so hunky-dory, high supply, high demand, why is it that so many airlines are going belly up? Well, because running an airline in India is no easy task. While increasing demand has been boosting the revenues, what's also been rising are the costs, as a result of which the overall industry is still making losses. Let's talk about Indigo, the largest player there. They themselves only returned to profitability after the pandemic in the third quarter of FY23. And that's just an exception. Most of them have still been in losses. Recent events have brought into focus the costs and risks of running an airline in India. In fact, no better than the former aviation minister and the current petroleum minister, Hardeep Singh Puri, to talk about this in just one line. He said this on the sidelines of the India Business Leader Awards.
There is a saying, I shouldn't repeat it here, that if you're a billionaire and you don't know what to do with your money, buy an airline, you'll probably become a millionaire. But no, but seriously, Air India is a case in point. I was told that the effort had been made on 2 earlier occasions and you would never be able to sell it because somebody in our system thought you should retain 24% or 25%. Yes. So I used to ask them, you know, you took over a perfectly healthy airline, made a royal mess of it in 50 years, and now you want to retain that control. Why would anybody put their money in and buy it?
The age-old maxim, how do you become a millionaire in the aviation business? Start out as a billionaire. Well, you know, but let's talk about a lot of casualties in the aviation sector. Go First is just the latest one. It's not the first high-profile carrier to go bankrupt and possibly not the last one, because if you look at India's aviation history, it's dotted with a bunch of airline failures. From the days of the yore, you had the fall of East-West Airlines, Modi Luft, Damania Airways in the 1990s after the deregulation of the civil aviation sector, to the more recent high-profile ones like Kingfisher Airlines and Jet Airways folding up operations as well. Even the most influential corporate groups have found it very difficult to churn profits in this industry. Ritu.
Well, that does bring us to the question, why is it so hard to make money in the aviation business? Now, there are reasons that can be solely attributed to individual airlines, but in general, there are multiple issues which continue to plague the sector, and it really boils down to very little control over the excesses of running a full-service airline in what is an extremely price-sensitive market. Now, the aviation turbine fuel, or ATF, makes up 40 to 50% of the overall cost of running an airline, and that is highly taxed, with state taxes going as high as 30% on jet fuel. Then, of course, you have the rupee depreciation, and this specifically hurts the airlines industry because whether it is the lease payment to lessors, imported jet fuel, the MRO cost, all of these are made in dollars, and so a depreciating currency really pinches the airlines. Then you have regulatory uncertainty. We've seen this play out in the case of multiple defaults as well, how you deregister, export an aircraft in the event of a default, or the fact that there are multiple regulators that airlines have to deal with, from DGCA to Airport Authority of India and so on. That also doesn't help. And then, of course, there is fierce competition because some players dominate the market. They control the pricing. You can't really be an outlier. There are wafer-thin margins you have to work with, low airfares, and hence it's really a winner-takes-it-all market where volume is the name of the game. And at the end of the day, it is a handful of large players that dominate this market.
Well, so, Ritu, you know, the only thing that I figured which is thinner than a wafer are the margins on the airline industry. In fact, let's welcome our second guest on the show now, Mayur Milak, who's the Senior Vice President, Research, Auto and Aviation at Asian Market Securities, joins us now. Mayur, welcome on board is what we'll say to you.
Thank you, Mayur, for your time here on CNBC.
You know, we've been discussing how it's a brimming market, a huge potential, but a lot of challenges as well. In your analysis, what do you think are the 1 or 2 specific India challenges which perhaps, if taken away, could make the airline industry fly higher?
But you know, I think you've summarized it pretty well. So there are not just one challenge that should be taken care of. I think the first and most important, of course, is the fuel cost. Right? Globally, I mean, we are taxed so much, so you really can't compete with global players, right? Yeah. So just to give you some analysis on numbers, last year the fuel cost was 61 rupees a litre. This is FY22. FY23, your fuel cost per litre has gone up to 120 plus. Wow. So you know, you've doubled on that cost, and then you expect these guys to make money. So clearly the equation is not right as far as the P&L is concerned.
Sure.
You know, you move to the other side, there is competition, there is a lot of regulations to take care of. So yeah, I think it comes with its own set of problems.
You know, so what happens now? Go First is sort of, you know, halted operations for now. We'll see what happens with the bankruptcy. Will there be better pricing, better margins for the industry in the near term?
well, from a consumer point of view, it may not sound great, but for an airline point of view, I think, yes, they get a chance to get a better pricing. There is enough for grab. A SpiceJet has about 7-8%. We've heard for quite a long time now that their NCLT cases are, even that is not turning out pretty well for them. Go Air, of course, being the latest guy to move into NCLT. So combined, they have almost 15-16% controlled under them. So yes, this is up for grab. And well, if they are not running their aircrafts, well, the end customer is definitely going to suffer on that.
Do you have any analysis on the profile of the customers that fly? I mean, what proportion of the airlines get their revenue from corporate customers? How many of them are families? How many of them are middle class traveling to regional areas? Would you have any sense of that?
Yeah, no, to be very honest, I don't think they have really ever bifurcated that kind of classification. But the season will tell you all, right? So you know that Q3 fiscal is by far the best season. This is typically Diwali time, so you know for a fact that a lot of guys travel during that time. Again, this season, between April and June turns out to be smart because this is a time when kids are on, they have vacations, so a lot of families travel. So yeah, I think the season definitely defines that the volume growth is coming from which quarter.
The reason why I asked you that mainly is because to determine the stickiness of the customer, despite an increase in prices, like you said, if there is a customer who's traveling to family purposes or some retail customer would obviously use other options to travel, as against a corporate customer who may have to travel because of work.
See, I think honestly, if you ask me now, what choice do I really have, right? If let's say if I have to travel with my family to Delhi, well, any which ways railway tickets are not available. Forget whether it is cheaper or not. Even they are not available. So if I have to make a plan, I have to fly.
Mayur, we're going to thank you for your time here on CNBC-TV18. And let me come back to you, Mr. Dube, because, we were talking to Mayur as well about the Go First bankruptcy filing. From an industry point of view, what is your sense? What will it mean in terms of pricing, in terms of capacity, and what are the lessons for the industry?
I think a lot will be made out of pricing and load factors. I'll tell you that with the pace of aircraft coming into the market, I am not worried, and as a consumer, I wouldn't be worried about pricing and PLF and any kind of shortage in capacity. I think capacity is coming into India at a very, very rapid pace. And I think for the next 20 years, it's going to be a consumer's market. So I would first talk to all our consumers of every airline and say there's nothing that you have to worry about. I would say more looking at what's happened in the last few days or weeks. I think what we as a country need to do is to enact laws and regulations that make it easier for lessors to take possession of aircraft in the event of a bankruptcy or in the event of default. I think we need to build and bring back the confidence that these lessors have in the country as a whole. And so that's really where my focus is at.
All right, we have to take a short break on that note, but don't go anywhere. We're going to be back and discuss, as always, what works, what doesn't work, the yays and mays of the industry.
And we'll also get answers to the bigger question, are the Indian skies clear enough for takeoff for India's aviation industry? Don't go anywhere, just a short while, and we're back. Well, we welcome back you on Mad About Markets with a wonderful runway and a plane that's just about to land, because that is the plane that will tell us the yays and mays of the aviation sector. And as always, I'll go with the yays. The biggest yay, of course, is that for a brimming passenger airline industry, you need passengers. And do we have a lot of them? Of course, the world's most populous country.
Yes, we do, but we also have to deal with a lot of suboptimal infrastructure, which is a big may for the industry.
It is indeed a big may, but at the same time, while we're talking about the world's largest population, we're also talking about the world's largest population which hasn't flown. Only 1% of India's population accounts for nearly half of all the passengers that take to the planes or the flights. So obviously there's a large untapped potential there.
There is a large untapped potential with the passengers, but it's not the same story when it comes to skilled professionals, because you need to have licensed professionals to run a lot of these businesses, and there's a real shortage on that front.
There is a real shortage of pilots and a lot of support staff as well. So I take your point on that. But at the same time, a lot of people also looking to grow their demand because middle class income is increasing. This is something that we talk about on Mad About Markets very often, and that's a big yay.
But you know what, like many other industries, the aviation industry has also been hit by supply chain issues. So whether it is the delay in aircraft delivery, etc., that's a huge issue that the industry is currently grappling with.
I hope they smoothen that turbulence out over the next couple of years. But the question is that where do people go once they take the plane, right?
Yeah.
But now on that, the government has said that this budget, they said tourism is on a war footing. Let's develop tourism potential, drawing more travelers, not just domestic, but international too.
Well, they are, but you know, for these airlines to fly those passengers that are coming in from everywhere, there are high fuel taxes. And you know, these have not come down in a while. Even though we've had some respite, taxes have not come down. That has been a big ask of the industry.
Let's hope they do come down, because increasingly we are seeing a lot of share of low-cost carriers, which is making flying a lot more affordable. So on the one hand, you have a large potential. You have people whose incomes are rising. There are a lot of destinations which are being developed, and low-cost carriers which will take people to those destinations.
But you know, this highly price-sensitive market, that also is a concern, as is the high entry and growth barriers. Like we've been saying, it's not easy to do business in aviation in India.
It isn't, and let's hope that there is liberalization of global flying rights. If that happens, then that will prove to be a major tailwind, pun unintended.
Well, currently you need to have 20 aircraft to be able to fly, but you know, it all boils down to how profitable airlines are, and not very many can say that they are. On that note, actually, let me invite back our guest who has been with us to tell us about what, how Akasa is really faring. Mr. Dube, the overall industry is still posting a loss, and there are exceptions, like we said, with Indigo. Why do you think it's so hard to make money in the business, and what are the biggest challenges from your point of view?
I'll go back to my former employer, Delta Airlines, that made multi-billion dollars worth of profit each year, or certainly in many years, hundreds of millions of dollars worth of profit between the year 2010 and 2019. So 10 years continuously. And they weren't the only ones. We had Southwest Airlines, we had Alaska Airlines, we had Spirit, we had multiple airlines in the US that made money for several years together between the year 2010 and 2019. And that streak would have continued except for this black swan event called COVID. So I'd like to say that in other parts of the world, and it will be the same in India as aviation matures, for it not to be difficult to make money. Secondly, how does one go about making money? I think it's sort of very easy to talk about government taxes and government this and government that. I will tell you that that's a level playing field for everyone. And those kinds of environments that, environmental factors that we operate in, it's no different for one airline compared to the other, yet one airline makes money and another doesn't. So I'd say we should avoid trying to pin a particular airline's bankruptcy or particular airline's financial results on the government. I think they're doing a heck of a lot to actually promote aviation in the country. I think they're doing a lot to make aviation easier, but more than anything, it's a level playing field for everyone. So I think what really separates one airline from the other is the quality of their management team.
All right, quality of the management team, and perhaps some legacy costs as well, which make a lot more airlines more difficult to be profitable than the newer ones, which may not have legacy costs. But points well made. Let's talk about the bigger question then. Now, do we have clear skies for takeoff? Vinay, what's your take?
The skies are clear. I would put that in context. And the reason I want to put that in context is because on the one side, I am tempted to say unequivocally yes for the next 30 years. The skies are absolutely clear, unequivocally for the next 30 years. I told you there's no one that's more bullish about Indian aviation than me. But I want to take a minute to talk about the kind of hardships employees go through when something bad happens to a particular airline. And for their sake, I don't want to talk about the fact that everything is hunky-dory, because we've got a set of employees that will get affected badly should something untoward happen to one or more airlines. And I just want to say that my heart certainly goes out to them, and I would hope that we at Akasa, given our growth, can be a home for many of these employees, because those are the ones that really suffer the most when things don't go right for airlines. And so I want to really balance those two emotions here.
Clear skies for the next 30 years and a noble gesture of offering jobs to all those who would have lost their jobs in the current, kerfuffle that the aviation industry is going through as well. Thanks a lot, Mr. Dube, for joining in. In fact, on that note, we'll also thank Mayur for joining in and giving us his thoughts. Hope you had a good flight. See you next week. Don't go anywhere.